Hi, my name is Infiniti Whitley, and I'm a field underwriter in the state of Missouri. I specialize in life insurance and mortgage protection insurance. Today I'm here to talk to you guys about a concept that pertains to whole life insurance. Today's topic will touch on some of the pros and some of the cons of getting a whole life insurance policy, whether that be under the mortgage protection umbrella or whether you're just shopping straight life insurance. Okay? We're going to start with the pros first, right? It's always good to have insurance first and foremost because it insulates you and your family or friends or whoever you choose as your beneficiary from whatever the future may hold, right? It's a little, sometimes people think it's a little ambiguous, but, you know, speaking from personal experience, things can change in a matter of hours, in a matter of moments, and your life will never be the same. And so it's nice, even though, you know, perhaps you've passed on, it's nice to know that you've left your family with a safety net that will help them survive even though you're no longer with them. So one of the big benefits of whole life insurance is that you get lifelong coverage. So lifetime coverage, you put in for it, you get approved for a certain amount, you get a set premium, it's level, which means it doesn't fluctuate, it doesn't change or anything like that, and you pay that and you pay that and you pay that until somebody has to cash it in. Whatever face amount that you sign up for is also level, so that means that never changes, specifically under the regular life insurance umbrella. And most of my mortgage protection products that I sell to my clients, level coverage. Whole life insurance policies also accumulate cash value over time. So usually you put in for it, and within the first 1 to 3 years, that policy starts building a cash value of its own. So eventually, as you continue to pay for it, if you needed to borrow against it or you needed to surrender that policy, you would get basically what you put into it back out if it has enough cash value. Fixed premiums. I spoke a little bit about this a little earlier in the video, but fixed premiums means the same thing as level premiums. Once, say you go in, you get a life insurance policy for $25,000 and your monthly payments are $33 a month, then that means for the rest of your life, you'll pay $33,000, I'm sorry, you'll pay $33 a month to get that $25,000 benefit at your passing. So that's pretty good, especially in this economy where everything's changing and fluctuating, usually kind of upward. It's kind of nice to have that one thing that just remains the same. So earlier I spoke to tax advantages. So with a regular whole life policy that's not building interest over time, that face value that is paid out to the beneficiary is seen as a tax-free benefit. So that means that they can use that benefit tax-free, and they don't have to worry about the IRS coming after them for having that lump sum paid to them, as long as it's paid to them in a lump sum. Now, if you go the other route and get it dissected into monthly payments when you cash it in, then that's another story, but I won't go in that today. Estate planning benefits. Oh my gosh, this is something that I'm very passionate about. If you don't have an estate kind of set up and put in place, you're doing yourself and you're doing your family a disservice. So when it comes to estate planning, you really want to sit down with an estate lawyer and have something comprehensive put into place, get a living will put together, because if you don't, everything that you own, whether it's your car, your house, any kind of debts like credit cards, again, mortgage, leases, things like that, or whatever bank accounts that you have, they all get lumped together. If you don't have a living will, they all get lumped together and put into an estate by the government. And then from there, your family unfortunately has to go through probate and a whole lot of hoops that can extend for years. I can't stress that enough. In my personal experience, it took us 2 years, and my mom didn't have a lot when she passed, but it took us 2 years to actually get things sorted out and to get actual primary beneficiary sorted out for her final affairs. It was crazy. Don't do that to yourself. Don't do that to your family. I'm just saying. And also, insurance policies that you may have in force will go into that estate. So specifically with a whole life insurance policy, that gets lumped into your estate, but again, it is a tax-free benefit to the beneficiary or beneficiaries that you leave it to. Last but not least, I want to talk about dividends, because some whole life policies do accumulate dividends, and people can choose to either contribute that to the cash value or perhaps be paid out by it. But the type of life coverage that I offer is just a very smooth and streamlined experience. It doesn't deal in dividends. But if that's something that you're interested in, I would definitely recommend looking into those products for yourself. Alright, let's talk about the cons of whole life insurance. Because just like good things have the good side, they also have a bad side. Or bad side, it's subjective. But okay, let's get into it. So the first thing is that the premiums on a whole life policy are typically a little higher than, say, term insurance. Because it is spanning the whole life, there are different data sets that they use to calculate the risk assessment for that stretch of time. So usually the premiums are a little bit higher. So again, going back to my example, if you take out a $25,000 policy and it's like $33 a month for a whole life thing, that's cool. But say you just want a term policy per se, by contrast, you could probably get a 10, 15, maybe 20-year term policy if you're young and healthy, and it might be about half of that. So again, it just depends on what your needs are at that moment. Typically people that are just trying to cover their working years, let's say 30, 25 years, something like that, they'll get a term policy instead of a whole life policy. But if you're a little older, say like 50 plus, maybe you have a health issue, maybe you don't. Usually people will go with a whole life experience insurance plan as opposed to a term plan, just because it pans out better. But it really just depends on your situation on that. Complexity. So sometimes whole life policies can get a little complicated. Typically the products that I write are very simple and streamlined, so I don't really deal with that aspect of it. But certainly as you dive into the different forms of whole life policy, you can add different riders and options and things like that that are complicated. But again, fortunately, the riders and options that I provide are very simple, very streamlined. Lower returns. So in some cases, you might get a lower return on the policy than what you might have put in, and some people kind of side-eye that. But again, it really depends on you and your family's needs for that, because again, if you're older and you just need something in place so that your family isn't totally in the dark, or your beneficiary isn't totally in the dark at your passing, then a whole life policy will do that for you. But sometimes our other options offer a whole lot of other benefits that far outmeasure the premium, and so you're really getting more bang for your buck. It just depends on what you qualify for and what you're looking for. So you heard me earlier say something about surrendering a policy. So basically what that is, when you surrender a policy, that means that that policy goes out of force and you no longer have that coverage. Well, unfortunately, you get charged fees for surrendering policies because you technically put the insurance company itself at a loss, and so they want to make up that loss, because insurance is still business, still finances. So if you do go in to cancel a policy, don't want it anymore, you can surrender it, but just be aware that you'll have to pay extra to actually cancel out that contract. Opportunity costs. I'm going to be so real. Sometimes you go and get an insurance policy, and just like any other business or form of contract, you really got to think about, hey, this is a cost, obviously, but what potential benefit is there, and how likely am I or my family to cash in on that benefit? So, again, you're paying these premiums every month into this policy, and you're thinking you might not use it ever, maybe, or you might outlive it or something like that, which I find is more so common with the term policies, honestly, at least in my experience so far, that, you know, it might not be the best option for you at that time. But again, it's just something to consider. Like if you're young and you're super healthy, whole life, again, might not be the best option for you. You might look more so into a term policy where you can get like return of premium per se, which will pay you back what you put into it if you don't use it. Whole life policies are not for short-term needs. So as I mentioned earlier, you know, there are term level policies out there that you can grab for things that you might be concerned about the immediate future, whether it pertains to occupation or any kind of potential health risks or anything of that, or just because you know stuff can happen and hit the fan and you don't want to deal with the consequences of that. Again, I want to bring us back to that term whole life. These policies are put into place to benefit you in the long run. It's kind of like making an investment in a way, because you are investing in whatever's coming for the future. Now, if you're just trying to get a payout, a quick payout, I mean, that's not really the product for you. So if you're in it for like quick return or quick benefit or whatever that case may be, it's not always a good deal. Because say in the instance that you have some serious health complication, well, some policies, when you put them in force, if you already have a serious condition, sometimes it might take up to 2 to 3 years for you to actually be able to reap the full 100% of that benefit that you signed up for. So just be aware of that fact when you're shopping whole life insurance. I hope today's video helped you. If so, you can leave this video a little thumbs up, or you can leave me a comment down below if you have questions. I will do my best to answer you in a timely manner. I'm always busy helping other people in this office, so I'll try to get back to y'all as soon as possible. If you're interested in looking into mortgage protection insurance or life insurance and you're in the state of Missouri, you can always reach out to me via the forms on my website, which is linked either in the description box if you're watching it on YouTube, or on the profile of my Facebook page if you're watching that there. Hopefully I get to talk to you soon, but otherwise be blessed and have a great day.